I mean, it's a hugely significant change for these clients. In short, yes, we are working with clients who are looking to leave the UK. They started probably 18 months ago to the last year, leaving in quite significant numbers. And I think that's not a cut-off now that the rules have come in, that, you know, there are different lifestyle choices for those clients as to why they might still be in the UK for the time being, but are planning an exit this year or next, depending on their own personal circumstances. As a percentage, it's quite hard to put exact figures on it, and I think it probably varies from advisor to advisor what their client book looks like. But what I think is pretty safe to say is it's an increasing percentage every day that goes by and every year that goes by. And I absolutely wouldn't be surprised if it's 25% plus heading into the 40% mark.
Heading to the 40% mark. OK, so that is pretty high. That would end up costing the government then in terms of, I mean, was it a mistake then to sort of think that there was going to be revenue raising potential from stripping away the non-dom tax status? I mean, you know, the politics of it aside, the pledge was for it to be, you know, not just to answer some of the Labour Party's own kind of commitments, but also for it to raise revenue. So was that a mistake?
I think there's a question for government to ask about what it wants from a high net worth community in the UK, and every country has to answer that question. I think it worked very well for them to think that making these changes and abolishing the non-dom regime was going to be a revenue maker. There was a paper done a few years ago called sort of the Warwick paper that did a bit of analysis on this, but it was quite high level. I'm not sure it got into the detail and the data that necessarily needed to do, and I think there were going to be updates to that paper if it went through, but as you say, this is all politics, right? So
they haven't done their research well enough? I
think that they had seen the data that had come through from that Warwick paper suggesting sort of several billion would be raised from these kind of changes. And they worked on an understanding that there would not be the exit from the UK that they have seen. I think they thought that they had a better feeling for what the response to the changes would be. And maybe that their data could have stacked up if that had come to fruition. The reality is, I think that class of non-doms in the UK were much more mobile and responded much more, not aggressively is not necessarily the right word, but in much bigger numbers than the government expected. And that will cause issues for their figures.
Where are they going, Charlie?
Look, there's not one size fits all for these people. It's not just about tax. It's, you know, education, business opportunities, safety, all of these things. There are a few clear places where have been particularly popular. The Italy regime gets a lot of talk, and we've seen lots of clients move to Milan, Switzerland, Jersey, Monaco, Dubai. A lot of people have been moving out there. So it's not that they've all gone on a bus to one place or a private jet to one place. It's a bit more scattergun than that. But those seem to be particularly hot opportunities for them.
So then of the 74,000, it really is tens of thousands of people that may be moving themselves and their families elsewhere.
Yeah, I think as the years go by, as I say, I think that number will increase, and there might be some. And the issue that they have with the figure of the non-doms is there are also what we call shadow non-doms who are just not on the radar for the government. And particularly some of the larger ultra-high net worth individuals might sometimes be in that category, or the next generation of those significant wealthy families. And that caused them problems as well, because, you know, they contribute a lot more than just the tax they're paying in income tax and capital gains. So that wider contribution's a loss for us, for sure.
When you speak to your clients, what proportion are coming from finance? I mean, as a sector?
Yeah, so the non-dom, I would say, as a category of people, probably broadly falls into two broad buckets. There will be those that are in finance, private equity. A lot of the private equity people will be non-doms, and then the other pool will be, you know, ultra high net worth billionaire families who have got much significant wealth with many business opportunities. And I would say of our client base, or my client base, it's roughly probably a 50-50. And with the private equity group as a whole, you know, they are incredibly mobile. And I think, you know, yes, London's a significant financial hub, but I think a lot of people learned a lot through COVID, as you could probably be in many places to do your business. And it might be that we are, and we are still moving private equity guys into the UK and women into the UK, but we're also moving them out.
We're speaking to Mishcon de Reya's Charlie Sosna. Charlie, in terms of the non-dom regime, would bringing it back work? Chancellor Rachel Reeves has already indicated that she would allow this kind of more generous phase out of the non-dom status. She was trying to sort of soften it. It was quite pointed because she made that announcement at Davos. Is that kind of 3-year facility allowing former non-doms to bring in overseas wealth at a reduced tax rate going to help at all? Or would reversing the whole thing and just going back to some kind of non-dom tax status work also?
Yeah, I suppose 2 parts to that. The 3-year temporary repatriation facility, I mean, it doesn't hurt. If you're staying in the UK, absolutely there's opportunities it offers you. Is it enough in itself to make someone think, oh no, I'm not going to go to Italy or wherever I'm going to stay here? I'm not sure it is. And I'm not sure it was seen as much of a relaxation as the advisors and the non-dom community hoped when she mentioned it at Davos. I think they were hoping there might be a little bit more coming, but there wasn't. A reversal, I don't think is on the cards, and I'm not sure it's the right approach. Actually, I think there's many people who felt as a regime, the non-dom regime was incredibly technical. It was much more complex for clients than they would have liked it to have been. There was much engagement with government about the introduction of a sort of flat fee regime, pay X amount a year, and that will be covering your worldwide income and capital.
Which is the Italian regime.
Much like the Italian forfait regime. I think the UK would expect a much higher figure on that than what Italy say. We did a lot of engagement with clients, and many of them would say, I'll sign a cheque for $500,000 a year and be incredibly happy and would use the UK to base here. The feedback from government at the time was that they didn't have the appetite for a flat fee regime. Whether that's something that they will revisit when they see the reaction to these changes in the next few years is yet to be seen.
Charlie, on the flip side of this, are you seeing any clients knocking a door from the US saying, we're not that comfortable with what's unfolding in terms of US policy, maybe the UK could be a home for us? Yeah,
really interesting. With all clients, there's push and pull factors. It's not just about what works in one country, but it's what's working globally for them. The short answer is yes, we have seen some very significant high net worth families in the US who, and some of them on the face of it might be significant Republican families, but actually they are seeing what is going on their side of the pond, feeling uncomfortable about it, and are looking at the UK. They have global taxation anyway. The UK-US double tax treaty works incredibly well for them to minimise any impacts of the non-dom regime for them. And we have a big UK-US practice, so yeah, and a lot on the immigration side as well. So.